I'm Greg Hunter. Welcome to USAWatchdog.com. And we have had a wild stock market. I mean, up 800, down 800 points one day, up 500 points, down 300 points, up 500 points in a single. I mean, it's going crazy. And I couldn't think of a better person to have on than my friend, Gregory Mannarino, professional trader at traderschoice.net, where you give away your trades and all that stuff for free. Gregory Mannarino, thank you for joining us today on USAWatchdog.com.
Great to be here, Greg. Seriously. Love your show, love everybody. That's what it's all about, love.
Well, let's talk about what's going on in the markets. I mean, overall, and I got a bunch of little tripwires to talk about. There's a lot of tripwires, not little ones, big ones, trip cables in the economy. But what we're seeing in the last, the trading session on Tuesday is not the big one. And you gave a great explanation of that. What's going on in the markets, even though we're having a 400 or 500 point difference in the market from negative to positive to negative, and it's cuckoo. What's going on?
I like that. It is cuckoo, and it's very difficult to make sense of. Look, it's senseless. It's really the truth here, Greg. Look, there's so much going on, like you were alluding to earlier, with cables and trip wires and everything else. But look. And I'm just going to go back to what I've been saying since like forever now. Let's put some of this into perspective. This month, historically, is a wild one in the market. So some of this is seasonal. Some of it is uncertainty. The market doesn't like to not have certainty. It wants to know what's going to come down the pike here. I know it's a crazy thing to say that, and I'm speaking about the market as if it's almost like a living thing. In many, many ways, it is a living thing. It's the collective consciousness of every single trader and investor around the world trying to make sense of the bizarre world that we're in. So that's why we're seeing a lot of these crazy gyrations in the stock market. But I'm going to be honest, none of this has me worked up at all right now. I think what we're witnessing here, these big moves in the market, it's getting people shook up. But again, I think people forget about how real markets, we don't have a real market, but how real markets work. We're so used to stocks going in only one direction now for an entire decade pretty much, that when the market does this, it gets people nervous. This is not out of the ordinary here. It's not. And people write to me, oh my God, Greg, is this the big one? What should I be doing? And again, this goes back to the other thing that I've been explaining to people since what feels to me like time immemorial. That is, stop focusing on the stock market. And I'm so almost sick of saying this, but it's the debt market that we have to watch. You know this, Greg, better than anybody else that I know. Even friends of mine that are traders, you know this better than they do. It's all about the debt market. What's going on in the debt market, how they're keeping rates suppressed now for an entire decade. This has undoubtedly caused cash to be moving into assets where it had no business going into, coming out of things where it should have been going into. We have multiple bubbles all over the place, and this is going to correct to fair value. But again, it's not the stock market that we need to be looking at. The big one, in my opinion, is going to start in the bond market.
And so with all this gyration, I'm just cutting in. With all this gyration, when I called you on the phone, you said, it's up. I don't know, it was up or down 400 points at one time, and then it's just crazy. And he said, the first thing I looked at was the 10-year Treasury. It went down to 312, and now it's 314, and that's not that the warning sign is not flashing, because the 10-year is, and it may be a flight to safety. Of course, we don't have real markets, but that's the first thing you told me. I mean, it was very calming. So it's like, wow, it's going crazy. And you went, well, the bond market's, pretty steady. Tell me about that. Tell me about that in reference to these wild swings.
Absolutely, 100%. So look, what we've been witnessing for months upon months upon months upon months now is every single time stocks start to sell off or get in any kind of trouble at all, there's just a crazy amount of bond buying that is going on. When they buy those bonds, suppresses yields. By keeping the yields suppressed, it opens up a doorway so cash will flow back into the stock market. This is the same mechanism that we've been watching unfold now for an entire decade. So when you see this kind of thing, you know that more than likely by those bonds being bought up, there's a floor that's being put under the stock market. Now,
so you're not worried. This is why you're not worried.
This is why I'm not worried now. But let me just put another perspective on this for people to understand. Whenever there is concern in the markets, the initial knee-jerk reaction is in two places. You see a knee-jerk reaction of cash moving into the dollar, a knee-jerk reaction of cash moving into the bond market. So this may create almost a false sense of security at first. But again, I'm trading the market I have, not the one I'm thinking about really is coming too far down the pike. Because again, it's very difficult to do that in this environment of extremes. That's where we are. But at one point, and I am so certain of this, I can't even begin to tell you. And it's not just me, Greg. You know that. There's multi-billionaire hedge fund managers saying this. You got Alan Greenspan saying this. The potential for a hard, uncontrolled sell-off in the bond market is rising. So what does that mean? If bonds sell off, yields spike. And that is when we're going to know when there's a big problem in this market, when there's an uncontrolled sell-off in the bond market. Right now, they seem to have it managed pretty well. This is a managed market. It's big, and I can prove this to anyone right now. We've had a managed market since the meltdown of 2008. When the Federal Reserve decided to get in here and stop the bleeding in the Dow 6,000, they started buying up everything in sight. Now, it's not just the Federal Reserve. This is every single central bank on the planet. They're all doing the same things at the same time. So again, nothing is real. This is an environment of extreme fakery. And I believe they're going to keep this going until they can't do it anymore. But when you're looking for a real issue in the stock market, the one place you don't want to look is the stock market. You want to look at the bond market first.
Oh, excellent. Extreme fakery. Yeah, I wrote down a couple of things, a managed market, the drive down of yields. What I wanted to bring up was the, Tuesday they had a zero hedge story, and they were talking about that what's coming now, right now, this is really the end of the 2008. What we're getting is the culmination of the 2008 meltdown. What you have said many times, 2008 was a party over moment. And what did Richard Fisher, the former Dallas Federal Reserve president, say? In 2016, we pumped the market with cocaine and heroin. I mean, so that's the truth.
It's absolutely true.
That's what they kept it alive. When they're talking about the end of the 2008 meltdown, this is the culmination of the 2008 meltdown. We're going to get the finish up, the crescendo, something. But this is it, right? It's coming. Even though we don't have that big massive sell-off right now because the bond market is looking stable for the moment today, we're getting the culmination of the 2008 meltdown. I mean, that's what this really is. It's a joke with a long fuse.
Greg, you hit the nail on the head, and I think, at least I would hope that most people understand that the 2008 moment here was the moment truly where this market was just trying to find fair value. Everything was inflated. It was in a bubble. So instead of allowing the markets to just normalize at that point, what happened is world central banks decided to take over and start managing the markets, artificially opening that doorway, like I explained to you, by keeping rates suppressed. It opens up a pathway for cash to flow directly into the stock market through many, many mechanisms here. Easy money, companies buying back shares of their own stock, propping it up. That's just the mechanism that we've been seeing now for an entire decade. It has been very successful in hyper inflating a stock market bubble on the back of the biggest bubble of them all, the debt bubble, which is engulfing the entire world. And there's no way to fix that. There's no way. It can't be fixed in a normal fashion. So again, going back to what you were saying, and it should make sense to everybody that when the Federal Reserve, all the world's central banks got in here, started buying everything to reinflate those bubbles, we created another fake environment. The environment is completely fake. The distortions that exist are of a magnitude, Greg, that even myself, that I study this every single day of my life, I have to give up thinking about it because they're too big. They're too big. So they are going to correct. Now, you have to look a little deeper here, I think, but people need to understand what has been set up here by reinflating these bubbles, okay, on the back of the biggest bubble of them all. We know this is going to correct to a fair value, just like 2008. There's no way to sidestep this. It's like the truth. The truth always comes out no matter how much you want to hide from it or run away from it. That's a fact. So what bothers me and what hurts me to think about is how people are being told how great everything is. We're told we're in a global recovery. There is no global recovery. We've inflated a debt bubble around the world. Everything has been inflated on the back of that. You can't borrow your way into prosperity in our country here, anywhere around the world. But that's what the illusion is that everything is okay, but it's not. Everything is being propped up again on the back of the debt bubble, which is a financial Frankenstein. It's the truth. So what's going to happen is really nothing new, although the magnitude of this one is going to be worse than we have ever seen before. We're going to see a correction to fair value, and most people, the average person out here, is going to get caught on the wrong side, and there is no way out of it for them. And how do we know that? Because it's the same story that repeats over and over and over again without exception. So this thing here, when this market now, because it's the most distorted, that if you took every single bubble that we've had in the past, in the stock market meltdowns that we've had in the past, and put them all on top of each other, we're still not reaching the magnitude of this one, of how bad this is going to be it. And we're going to watch a systematic destruction of the middle class. We're going back to a two-tier society, Greg. This middle class thing is kind of a newer concept. Throughout history, there's been a two-tier society globally, and the haves and the have-nots. The middle class here, unfortunately, in my view, and I'm not saying this is going to happen in our lifetime, although it probably will, it will not exist down the pike here. And I think this meltdown is going to absolutely assure that. The amount of wealth that's going to be simply transferred from one group of people to another is going to be staggering. And people in the streets are going to have no idea what hit them, because again, it's a false narrative. They're being told everything is great. Keep putting your money into the stock market. For how many years have you and I and everybody listening to this been told by the mainstream media, by the mainstream financial channels, oh yeah, I almost have to laugh about this. Don't worry about rates rising. Don't worry about it, because if they rise for the right reasons, like for example, a very strong economy, stocks are going to go up with them. This was the narrative for years. The same narrative that this guy and you have been speaking against for a very long time, saying it doesn't make any sense. Of course it doesn't, because it's not true. It was a false narrative to get people hyped up, like they always do, and make bad investment choices so they can hyperinflate this bubble, and when the bubble bursts, wealth gets transferred over. That's it. We watch the middle class disappear just like that.
And some of the tripwires, and I'm just going to read some. I'm going to get to them all. But China has a $5 trillion yuan margin call. This is one of the headlines on Zero Hedge. Another one, and this is a big one, because this talks about everybody wants to keep packing on the debt. Italy, in their bonds, they want Russia to buy their bonds. The ECB has declared war. They've gone nuclear on Italy, which is, a big part of the European Union. Forget about Brexit. I mean, Italy is just saying, no, we want more debt. We're not gonna have austerity. We're not gonna have any more migrants. They've got a Donald Trump type government over there, nationalist government, which is not so bad if you're looking at it for your own people. But that's another tripwire that the ECB basically is breaking up I mean, Italy is saying, we're done. We're out. We're going to do what we want to do. We want some more debt, right? I mean, isn't that what you're talking about? People are just going to keep packing the debt on?
Of course.
Could that blow up the could Italy blow up the ECB, and could the ECB blow up the world?
Let's do this here. You know, I practiced medicine for 20 years.
Yep, you're a physician's assistant, not
that is correct.
The trolls want to call you a nurse, which no nurse can prescribe narcotics. Not that you.
No, I do the same.
You do, but when
PAs, right. PAs do the same job as the MDs.
That's right.
Different title, same job.
Yeah.
Now, what people don't understand is what we look for is the root cause. What is the root cause of these things? You know, you could sit here and look at every little minute little detail, but let's just cut to the chase. What's the root cause of what's going on here? It's global debt. The European debt crisis, well, where did that go? Was it ever fixed, or was it made monumentally worse? Well, guess what? It was made monumentally worse. They tried to fix a debt problem by adding debt to it. It's insane how anyone would believe this would work. And this is...
Well, you know why they did it. You know why they did it right. I mean, the rich people said, "Hey, man, we stole our money fair and square, and we're going to pack this onto the people, onto the central banks. So, hey, we want our money. You know, hey, whoa, wait, whoa. We want our money. You little, deplorable plebes. You know, you're the people that are going to pay for this."
Isn't it always the same?
I mean, that's what's going on here.
Of course it is. The people are always misled.
The rich people don't want to take a loss.
The rich people don't want to take a loss.
That's what has to happen.
It's always the middle class that are going to get the short end of the stick. It's the way it has been throughout history. It's very sad. And this is what I'm talking about with regard to the middle class. Unfortunately, the people at the lower end of the spectrum here, they're already lost. They have nothing to take. The middle class here has been greasing the wheels of this machine since its inception, the inception of the middle class here. And the fact is, with regard to the European debt crisis, what's going on with Italy, the ECB, look, it all comes, the root cause is debt on a global scale that is unimaginable, Greg. It's unimaginable. It really is.
I think they want the ruling class and everybody else. I think they want it back to the days of the feudal system. I really do. I don't think they like the Magna Carta. They don't like the U.S. Constitution. They don't like the First Amendment, Second Amendment, Third Amendment, Fourth. They don't like any amendments. They don't like any Constitution, Bill of Rights. They want us, the ruling class, which is tiny. We get all the stuff. And you're the deplorable underling class, you do the work. And if you step out of line, we'll just off you, or we'll make you live in a van down by the river. Whatever.
Well, that's
what the Italy thing is. The Italy thing is just yet another warning sign of the debt just getting so big it's going to blow. Is that what the Italy, and the ECB crisis is?
Well, that's definitely a little piece of it, but this is not just an Italy ECB issue. This is a global thing. There is not one corner of this earth right now that is not buried under an unrepayable, insurmountable amount of debt. And what are they going to do? Who's going to suffer here, Greg? And this is what I want people to understand. It's going to be them. The people that are watching this video are the ones that are going to suffer here, period. There's just no way out of this. It's a terrible mechanism that has been created. We've allowed this to manifest itself all of these years. Nobody seems to want to do a darn thing about it. It just gets worse, and it's just a repeat. But this is going to be worse than anything we've ever seen. But this is nothing new. This is what I want people to understand. This is not unique, really, other than it's the worst that we've ever seen before. But it's just a repetitive cycle that just happens. Risk on, risk off. Risk on, risk off. And they're doing everything in their power. World central banks, world leaders, to get cash moving into the stock market, keep it going into that direction. Why? Because when this all ends, what happens to all that cash, Greg? All the regular people here that have their investment plans, have their 401k plans, they're stuck. They only make cash if the market moves in one direction, higher. If it goes lower, they lose. But the banks here, they know how to take advantage of this. Traders like myself know how to take advantage of this. It's exactly what happened last time with housing. The banks, Goldman Sachs, caught red-handed, betting against their own clients. Did anyone go to jail? Maybe some low-level flunky, but I mean, look, let's put that into a perspective, just to prove to people that the banks never lose. Did even one management high-level executive of any of the major world banks ever get in trouble? No.
And you just sent me an article about how they're rigging LIBOR again in Deutsche Bank, which is completely. I mean, I know.
But did you hear what they're doing? Two low-level traders are being blamed.
Yeah.
Two low-level.
They have no bosses. They have no bosses. Nobody's supervising them. They're rogue.
Rogue. No, exactly. But this is the same thing. This should prove to people how sick and twisted this really is.
These two low-level traders are rigging the global London interbank offer rate. Just two guys.
Yeah, two guys. And they want people, and people, they're going to believe it. Some people are going to go,
they fixed that. They find them.
It's too much. It really is just too much, isn't it? I mean, seriously, it's laughable.
It's almost like something off of Monty Python. I mean, it's almost a comedy, but here's why it's not funny, because they're trying to get us to believe this. I mean, it's laughable to me and you, but they're trying to.
Exactly. I would be willing to bet not even one of the people that are watching this video believe that story's true. But again, it's floated out there. People are supposed to say, okay, it's the two traders, again, rigging LIBOR. Sure it is. Okay.
Here's another.
You know what it is, too? This is what I think is going on, and I think it's very sad. Pavlov's dog. It's a case of learned helplessness. People get into a state where they feel like it's so out of control that they throw their hands up and they just surrender. But no, you can't surrender. We got to fight back. Here in the United States, this is supposed to be our government, of the people, by the people, for the people. To leave all the decisions and everything up to whoever is over there at the top is insane. It's us. We're the government. Let's take it back, period. And this, it goes for people around the world. How have the few controlled the multitudes since the beginning of time? Through the same mechanism, divide and conquer. And that's what we're allowing them to do every corner of the world, and even here in the United States. It's very, very sad.
Let's talk about something you can do, and emerging markets are doing it. I just want to break. This is an RT story. I don't like RT. The reason why I don't like RT, I mean, people have quit live on the air saying they're a propaganda arm of the Russians, which they are. You cannot criticize Putin. You cannot criticize their government. I've criticized Barack Obama. I've criticized some of the things in the Trump administration, although he's got a huge job and he's making $1 a year. But you cannot criticize Russia or Putin with RT. Which is that just tells me it's a propaganda arm. But here's a headline that they did have, and I read it, and they had a lot of facts and figures on it. And here's their headline, and it says, "Emerging economies buying gold, expect U.S. banking system collapse." Now, again, RT, but still, there is some truth to that, because gold's catching a bid right now. Rob Kirby is saying that the big powers, the people buying tonnage, are all looking for sourcing tonnage of gold and silver. And the big players are buying, even though you go down to your coin store and still get gold, which is a gift. But what does that tell you about the emerging markets? They are doing something to protect themselves. I mean, you have China and Russia doing a bilateral trade deal using yuan and ruble. You have Saudi Arabia doing a deal in oil with that they're going to take payment in yuan. I mean, they're getting away from the dollar. What say you about people and they're not doing this because they hate America. They're doing it because they're afraid of the dollar crashing.
Well, there's no doubt about it, and anyone that follows my work since day one I've been telling people to become their own central bank, bet against the debt. That's the truth here. That means hold a hard asset. Forget about the no less than 5 banks that have been caught in the last year alone rigging the gold and silver markets, Deutsche Bank being one of them. Nothing ever happens. So good, let them play their game.
They're rigging it not to go up. They're rigging it to stay low.
They're suppressing the price. I think most people are aware. It's so rigged that it's just, again,
and they're buying
beyond. It's beyond anyone's I think ability to understand how rigged it actually is. It's just too much. But that's okay. Let them play their game. We're going to play our game. It's no secret, and I think this has been going on for a very long time. Governments around the world acquiring gold, mostly gold. I'm sure they're acquiring some silver too, but mostly gold. This is, again, nothing new in my view here. Look, I believe that, and it's not just them either, Greg. I have some friends of mine that are very affluent, and they're doing the same thing. They're buying gold. They're buying silver, understanding where this is going to go down the pike here. I would be willing to bet here that most people who are affluent have a significant, in fact, probably more than most, if they're not all, but I believe almost all of them are in a spot now where they are acquiring gold. They understand where we are on a global scale. World central banks gone wild. It's a race to the bottom here with regard to currencies. Now, let me just touch on something real quick that you had alluded to. That is this issue. It's getting a little bit of attention, I think, with China trying to circumvent the petrodollar. What would that mean for the dollar? The dollar is going to lose a heck of a lot of purchasing power if that were to happen. So, again, it just goes back to bet against the debt, become your own central bank. The root cause. It's always the root cause. You could sit here and drive yourself nuts and look at all these little things. I'm more of a macro guy. I like to look at the bigger picture, try to take in what's going on here, and figure out the best course of action. And look, if it's good enough for governments and for the affluent to be hoarding precious metals like you and I, and hopefully a lot of people listening to this have been doing for years, well, I mean, I think that says something. It's a crazy thing, Greg. Look, the currency is part of the debt, and we don't want to be holding that. We want to be holding the anti-debt. The opposite of debt is holding a hard asset. You and I. That's how we started our friendship. We've been friends for years.
You're saying own your stuff, own your house, own your cars, get out of debt. I mean, upgrade your equipment. I mean, there's a whole lot of things you could do other than just buy gold and silver. Buy yourself a new set of tires. I mean, fix your house. Buy food and water. I mean, have some tangible assets. You could buy artwork, diamonds, gold, silver. Oh, that's the simplest, cheesiest in U.S. coins if you're an American. U.S. coins, or if you're in Canada, you should buy Canadian coins. They make beautiful silver eagles, silver maples and gold maples in Canada. So I mean, or if you're in overseas, Krugerrands or Philharmonics, or although U.S. incremented coins and Canadian coins, those are all good. But you're talking about for the average person should be holding. Also, if we get a credit freeze, having some good old fashioned cash. I don't mean like millions of dollars stashed under your in the floorboard of your house, but I'm talking you should have some cash in small
I'm glad
bills.
you brought that up, because that's something I've been explaining to people for a long time too. That was the main issue that people don't even realize or understand happened the last time in 2008 when the credit markets froze. What that means is, Greg, as you well know, once that happens, transactions stop. Cash is unavailable. That's it. You go to the bank and try to take your cash out. It's not there. ATMs stop working. The Federal Reserve, that QE1 thing was to initially free up the credit markets. We're going to get that again. We're going to get that again in a big way. But how are they going to unfreeze the credit markets this time? By doing what? The same thing they've been doing now for an entire decade. I think this might have something to do with why the Fed wants to nudge interest rates a little bit here. But again, remember, rates were supposed to go up, and it was supposed to be a good thing if our economy was so good and stocks were supposed to go up with them. You know what makes me laugh, Greg? You get these same so-called professionals on the mainstream financial channels who have kind of changed their tune a little bit. Those same people who were saying, oh yeah, don't worry about your stock investments, because they're going to go up too, along with bond yields, if they go up for the right reasons. Now, these same people are saying, whoa, hold on a minute, maybe not. I want people to look at the source. Some of these are CEOs of corporations. In fact, they've been parading them out, especially on CNBC lately. They got CEOs of these corporations coming out saying, hold on a minute, everybody. Maybe this Federal Reserve is being too aggressive. That's the word. They're using aggressive now, from the most easygoing glacial rate rising pattern that has ever been even thought about in the history of the world to an aggressive Fed. Now think about it. These CEOs, how do they get paid? Well, most people don't realize that they get paid in stock. So of course they would love to see the more easy money going and coming and coming and coming and never stop, because if that happens, well, their stocks will continue higher and they get richer. This is the mechanism. It's disgusting in my view.
You think stocks are going to take a hit, though? I mean, overall, I mean, for the moment, we're okay for the moment, because just look at the bond market. And you're saying that triggers the bond market. You see rates spiking, run, Forrest, run, right?
Oh, absolutely. Oh, there you go. I mean, that's it.
People say, well, Greg Mannarino's a trader, but you're still sweeping the market and converting to tangible assets, whether you buy a new car or house or whatever it is you're doing with your money. I don't want to know, but I suspect you have no debt.
No, I have no debt, but I keep a fixed amount of money in my trading account. When I go over a certain amount, I sweep it out. That's it. And I think that's the way I think that for me, that's comfortable. That's how I guess can sleep.
So you can only lose so much money. In other words, if your brokerage goes MF Global, okay, I knew I was going to risk that much money, but the other money, I don't keep the whole thing padded. I have other assets and other, maybe you bought a farm in Iowa or whatever. I don't know. But anyway.
Because you're right. What's going to happen? What would happen to, let's say, a cash that I have locked up in some account over here? There may be a time when I don't have access to it. So that's why you only I don't believe that any trader in their right mind would ever put, let's say, all their eggs in their trading account and just not move it out of there. That's not what traders do. You use that cash that you're making for things.
So you're converting to tangible assets.
Well, absolutely.
The simple play is don't have debt.
Let me touch on that real quick, Greg, because that's an important concept here. Understand where we are in this cycle. Okay, it's risk on. That door is being left open by the bond market, so cash continues to flow into the stock market until it doesn't. Okay, it's going to stop at one point. We're going to know by looking at the bond market. Very, very simple. But we're going to have a risk-off environment at one time. It's going to happen. The risk on is not going to go on in perpetuity. It never has before, and it never will, and it won't now. So understanding that by holding hard assets as investments, okay, here, you want to look at things that are incredibly suppressed. And in my opinion, it's gold, silver. Silver is my favorite asset, still is. I still believe sincerely it's the most undervalued asset in the history of the world. So there's going to be a moment when that reverses, when these risk-off assets are the ones that everybody wants to get their hands on. So we're going to see, again, market here, metals here, reverse. And then this is going to happen again, the opposite way. This is just how the markets work. Risk on, risk off, risk on, risk off, risk on, risk off. Just understand that.
But it could take years. It could take years, not days. It could take years. The gold market and silver market may go up for years.
Well, yeah. I see what you're saying. Yes. But this is what I believe is going to happen. It's the same story. This is another thing. Look, just look on history and you know what's going to come down the pike. When we see, and we're going to, in my opinion, and I've been talking about this for years, before Alan Greenspan, before all these multi-billionaire hedge fund managers are talking about a meltdown in the bond market, I've explained to people that we're going to see a rapid, uncontrolled sell-off in the bond market. That's going to push yields up very rapidly. When that happens, the same mechanism that has been in place now for an entire decade is going to unravel rapidly. What does that mean? Cash is simply going to be flying out of the debt market. It's going to put pressure on the stock market as rates rise again, opposite environment than what we have here. And the cash does not go to money heaven. It's going to look for places to go. That's what's going to happen here. So it's going to be going into, in my opinion, hard assets, commodities, crude oil too, stuff like that. So who knows what the value of these things could actually be in a real market if we were there now, or when this corrects to fair value. It's going to be incredible, Greg. Absolutely. I don't think people they're going to be shocked at one point here when they realize the true value of the stock market, of the debt market. What is debt worth? Let me just say this real quick if we're going to go on any further. Nobody, not me, probably nobody watching this is smart enough to know the actual value of debt right now. It's been suppressed for an entire decade. No one can probably gauge what the actual value is of an asset, which has no chance of ever being paid back. So what's it actually worth? What would he have to offer? What would be the fair yield being offered on, let's say, the 10-year in a real environment? I have no idea. Nor could I even begin to.
But it's a lot higher than 3%.
Oh my God.
Yeah, it's a lot higher than 3
Multiples higher, Greg. Yeah. Multiples higher.
Yeah.
And what would that mean for the stock market? What would that mean for the value of everything? Houses. Oh man, I tell you, it's crazy.
Gregory Mannarino, you are you run and you are the founder of TradersChoice.net. I love that name. You're going to sell it for a ton of money, I predict someday. TradersChoice.net. And they'll probably ask you to stay on for $1 million a year to run it. But anyway, Gregory Mannarino at TradersChoice.net. All the videos, the analysis, trades, all for free. You don't sell anything. You don't make any money. We and I talk about gold, but I don't sell gold. I have a sponsor that does, and she's totally honest at Discount Gold and Silver Trading. But I don't. She just buys airtime. I'd kick her off if she was ripping people off. But we don't sell anything, but, be your own central bank. Buy real stuff.
Let me just say this. I do have 2 briefs that I do offer for sale very cheap on my blog, but all of the cash there, all of it, goes. Greg, you know how I am. I am an animal lover. I also support other charities too. But all the profit that I get from my books, from my brief sales, goes to support animal charities. I also support other charities too. I attend charity events for people as well. I explain to everyone at the end of every video that I do on Fridays that we need to love each other, care about each other, and be charitable. I try to live by those 3 things every day of my life. And I think if we all embrace that, we'll be a lot better off.
And I know you're a Christian too, so good brother. Good brother, Gregory. Good. It was nice having you on, man. It was
nice
really nice. I pray on having the right guest at the right time. You're perfect for today, which wasn't the big one. I mean, it's not like, oh my gosh, this is the big one. No. That's the first thing you said to me. He says, dude, it's not the big one. It's gyrating. Yeah. But it's look at the 10-year Treasury. It's like frozen. So it's not.
How about this? Yeah. How about I'm gonna leave. I want everyone to see this. Okay, while I got you here.
Yeah.
The stock market today. Earlier yesterday, whenever this comes out,
Tuesday,
was down 5. I wrote this down. 548 points. We are now the Dow Jones Industrial Average right now. This is live. Is down 54.
Yeah.
58. You see it changing
there? Yeah.
You want to talk about an epic move? Almost a 500-point move. That move in the market got everybody shook up, and I hope that the video that I put out this morning kind of put everyone at ease a little bit here. Forget the stock market, people. If you're going to take anything away from this, if you're a trader or an investor, if you have cash in this market, you're going to look for the big one in the bond market. When we have an uncontrolled sell-off, when you see that 10-year yield spike, and it's not coming down, that's when we're going to know. And I promise to let everyone know what I think it is. And like I said, obviously, it wasn't today. 500-point swing here? Are you kidding me?
Gregory Mannarino, you're the man. Gregory Mannarino, TradersChoice.net. Thanks for joining us today on USAWatchdog.com.
Thanks, Greg.